So
Yeah, I was going to say you could be 400 pounds and it's going to fit, or it could be 100 pounds and it's going to fit.
Yeah.
All right, guys. So we'll get started with the big picture outlook. We'll go over some top ideas. We'll go over how to adjust this watch for those who just ordered it. But getting started again, this 10-year continues to go on the craziest run that we've seen in the last decade. It looks somewhat similar to the last run that we saw back in March, where it had this run up, consolidated.
Ben?
Yep.
Can you share your screen?
Oh, good man. All right, 1 second.
There we go. Perfect.
Just gonna start this over. All right, guys. So again, as I was saying before, 10-year is on the craziest run we've seen this decade. My apologies for not sharing the screen, but we have seen a similar run back in March. We had this run up, little consolidation / little push up higher, and then that next consolidation. So it looks almost identical now. This couldn't be, more, twin brothers or sisters from, a chart pattern standpoint. So we'll see if this is the same thing, where this is now the new resistance. We keep saying that as it keeps breaking out higher. That's the hard part. We're trying to call tops. No one knows how high these things are going to go until the trend breaks. Until this trend line really breaks, the trend seems to be higher. And with that, the equity market should continue to have some downward pressure, even though day to day it seems like a coin flip. With one day the market's down 3 or 4%, the next day we're up 3 or 4%. So it's getting very, coin flip action. Not the easiest, but if you do scan some individual names, they definitely are some setups out there. But looking from kind of top down, everything does, it looks pretty, honestly, very bleak, but it doesn't look very easy out there. So we do see, for the SPY, you can see this very obvious, or becoming more obvious, of a breakdown stage. Maybe this 360, 350 area is starting to form more of an actual base. We're leaving that stage for breakdown and forming a base. That's, we'll see that with time. For now, it seems 380 is kind of the next area to look to put risk on up through in the SPY. But again, we have these lower highs that have been forming all year, where we should expect that trend to continue until we see a really big base start to form. Then it can start to, form some better resistance. But for now, if we're trading this range, it's like trying to buy up in this 350, 380 area, trying to sell above kind of the 400-ish area. That's kind of the, this downward trend line to kind of keep an eye on. For the energy names, again, for Shake and myself's bet, his is if Exxon will increase 20% from its current share price, where I'm calling Humana to increase by 20%. We'll see which one wins that. So far, sector-wise, obviously energy is looking far better. Sector-wise, it just broke out of this little bull flag recently, and it seems there's not much in the way until this 52-week high retest. So just like we saw with utilities earlier this year before they got smoked, if this was the 52-week high, this was the time to, this was the 52-week high. When it ran back up here, it was a great time to take profits. It was not a great time to put on risk. It was a great time to lock something in. So the same with VDE, we're seeing the same thing. We're seeing VDE break this prior pivot high. We see it running back towards its 52-week highs. And when it gets here and it looks amazing, and Exxon's up 20% from where it is today, that would be the time to take some profits in this sector. For the rest of the sectors, again, a lot are setting up. I'm not going to go through every single one, but it seems to be kind of two similar camps. Either kind of we're basing out in these ranges with these areas to buy up through off of recent support, all pretty much identical. Financials, mid caps, biotechs, Dow 30 is breaking out a little bit. All these look very much the same, where there's a few weaker sectors, such as consumer staples just broke this major topping pattern to the downside, which we want to avoid for the time being. Just broke, like we remember going back from the pandemic when it broke up to 300, the stock was just dead. We're seeing that with the consumer staples. We're seeing that with the REIT names, again, breaking that major support to the downside and not really catching a bid. Again, pretty much an avoid for now, especially with the rates rising. It's just hurting the real estate market. Telecom, again, super dead. The first sector to probably show us that we can actually retest these pandemic lows which for the most part, I don't think anyone thought would be a possibility this year, given what we have for the last 2 years. But this is, telecom is showing us that this is a reality, that we can see these breakdown stages for longer than expected, and that we can retest lows that we haven't seen for at least 2 years. So for this, you would want to expect a shakeout through this low. We would not expect this low to perfectly hold and to bounce. We should expect a shakeout out there. And then again, lastly, utilities. They were the first sector recently to touch 2-week highs, as we said before, but it was a great time to take profits. Now they're at the 2-week lows. So that's not saying it's going to happen with energy, but just remembering as we get up there and it looks perfect, there'll be time to take some profits. Moving on to a couple of top ideas. It's APLS. I took a shot in it last week and got shooken out. Just had to stop too tight, but still setting up fine versus the proper out. So I do have an order to buy this back up to 60 again, and I will just give it first the proper room. Earnings is around the corner. You have to keep a little bit of eye on that. So take just a little trade into this range in the 65 to 70 area. This would be kind of best case to get it up here, but we get a little move to 60, or 65 next couple of days, might be a decent little swing. Humana just started to break out. Got in this on Friday up through this 510 area. For now, just keeping it light versus 45. And last is Hershey through this 230 / all-time high 233, 234 area. Those are a couple that I'm keeping an eye on. Before having I pass over to you, for the guys that did order this watch, again, every watch comes with a screwdriver. I know it's going to be hard to see the links in here, but there are little spots to take the screws out. Very easy. Phillips head, you unscrew it, the links come out, you put the link back in. And or on the top end of the buckle, again, I know it's going to be hard to see, but on this top part right here, you can adjust the strap. If you see inside here, you can see these like little teeth. You can adjust the strap basically within like a half an inch. So if you want to take a couple links out, we added obviously extra. We don't want the watch to be too small for anybody, but you can adjust it down to any size. It's pretty much needed, unless you're a child and it's not really a concern.
Put it on your neck.
Yeah. Unless you're a little dog, you make it a necklace. But those are a couple of the top ideas. Again, this Honeywell's working nicely. This Deere breaking out nicely. CI, a lot of these things we've been keeping an eye on. Again, Netflix, they took it away into earnings. I know some still had it, so now it's just trying to be patient with it, into this gap fill. So a lot of the, there are some sectors out there. There are some stocks out there that are setting up. There are some stocks that are breaking out, but we definitely have to just scan more. Where the last few months we definitely have scanned less because the market's just been kind of crappy. But there are some ideas that are working. We have to just kind of keep hunting for them every day. So if there's any ideas members have.
Definitely. First one, Kush has got a couple. He's looking at CAL through 2650.
Yeah, see, definitely see who's looking here. We can see this little base that's been forming. We can see these higher lows that have been forming as well. All points to, break and move higher. You'll have to give it $1.50, which isn't ideal, but definitely see who's looking out there.
Mm-hmm.
And through that 30, okay. 30 looks, okay. Yeah, again, this definitely like Kush's wheelhouse. Looking at these recent IPOs, and through that 30, through this 35, 36, all look, definitely very good in time.
Yeah. Next one, SWAV, SWAV, through 280. I really like this one, actually. It's probably one of my favorites. Like
nice little wedge. Yeah, a little pennant, little wedge. Definitely see who's looking at their earnings are, you got a little bit of time. So yeah, definitely.
2 weeks out.
Definitely looks good.
It looks pretty good. I mean, it's surprisingly wide, even though it doesn't look like it, but you still have to give it $20, which is not terrible for a $280 stock. But it's still kind of up there. So you have to just keep that in mind. I think you buy a 280 versus 260. And because it's on this descending wedge type of setup, I would quickly move my stop up as it starts to break out. Since it is a wedge, there's higher probability of seeing rejections and resistance at every little high point on the way up. So you have some resistance at 290, you have a little more at 300, a little more at 310 or 315. So you have to sort of take profits on the way up because this could reject at any moment type of thing. But really nice setup. I like it overall.
Yeah. Like the day that this triggers through this like 280, 282 area, 280, whatever, whatever the close diagonal entry here. It's like if you don't see a day like this through that pennant or that wedge, it's like that's where it's like you don't have to give it. It's like if this thing, pushes up through 282 and end of day it's 280, it's like it's not going that day. Like this needs to be, day one, 290 plus to even consider something where that you're kind of almost going into it as a day trade. Like if this thing is not breaking out on volume, I don't have to even give it the 10 points because it's not gonna, or the 20 points, because if it's not breaking out hard, it's not gonna go at that.
I agree.
That day.
Especially with earnings in 2 weeks, you really don't want to sit in this and sit in the consolidation because then you're just sort of wasting your time. Next one he's looking at is ACLX, which is really, really nice technically.
Oh yeah, this was it. From last week. And I know it looks even better. This looks really good. So
just got to give it that. Got to give it $1.
Yeah, still giving a buck.
Kind of wise. And I mean the volume isn't great. I mean personally for me it's a little low at it's under 300K average. So you have to keep in mind of the possible slippage there and that sort of stuff too. So even if you're risking $1, you're really risking probably like $1.50 just from a risk standpoint of slippage and like when you're getting in, when you're going to get out. So just something to keep in mind. But overall, I really like this one. Alex just mentioned one in the chat right now. He loves. He says, "I love this KEX monthly through 70, 71 area." From a monthly standpoint, yeah, I see what you're seeing. From a daily chart, you look really, really extended. I mean, it went from 62 to 70 in 7 trading days. So you're sort of, you're buying the top of the move here at resistance. It looks like it just had earnings this morning, not really moving.
Yeah.
But I think you're sort of chasing the move here, and you have to see a few weeks of tight consolidation before trying to get into this one.
Yeah. And if it reported and it's literally trading exactly where it basically closed up Friday, that's probably a bigger, like if no one cares about earnings and it's not moving the stock, what else is going to really move this?
Yeah. I've never even heard of Kirby Corporation, so I'm not really sure what they do, but yeah, my monthly chart looks really, really good. Let's see what's next. Kushner's got one more, CQP through 57.50.
CQP.
Yeah. Energy name.
Looks great.
Thin one, but yeah, this one looks really good. I like this consolidation.
I mean, this is like the tightest risk one so far where you can really give this thing
$1, yeah.
$1.50. So you give this $1.50 or that $20 name $1.50. So I'll give this thing $1.50 all day long. Looks very good, especially with that energy sector, kind of working a retest. Definitely seems to be the least to be.
Next one from Reynaldo, he's looking at SJM, JM Smucker's company, peanut butter and jelly. This one looks just like that other chart. So looks just like CQP, and this one you can actually give it even less risk because it's a $140 name. So he's looking to buy it through 144, stop under 141-ish or 140, risking $4 on a $140 name.
Yeah, that's what I was trying to say. Like, there's definitely some charts out there. You just have to be, I guess it's not all-time highs, but still looks great. This is like a close to A+ as we can find in this market right now.
Yeah. Tom C is looking at Wolf. WOLF. Yep. Wolf Speed. Earnings in 2 days. It looks like it's gapping up this morning. I don't know if maybe earnings ended up dropping earlier, but he was looking at 107.30. So obviously that is, if it does gap up this morning,
it's taken away.
Long gone. But usually if I really like the setup and it is gapping up, I tend to look for that gap fill. So possibly if it's, if that is a real gap up and it sort of just sells back off into that 108 area over the next day or two, I would look for a possible low risk, gap fill and then a bounce from there.
Mhm.
So we'll see what happens. What else? I was looking at CALC or no CALX. Was it? No, CAL. It is CALX. Yeah, CALX. Through that, ideally 64 later in the week. I don't really like to buy right below where it has those top wicks because that just tells me there's sellers in that area. So I'd rather just clear that zone. But this is one I'm watching for the week. It has earnings after the close today. So we'll see if it can sort of gap up right over that 64. That's where I'd look to buy this one. And then the other one I'm looking at, which you mentioned, was Hershey's HSY. I really like the setup. I think it looks solid.
Yeah, I mean, there's definitely some stuff out there.
Yeah,
Definitely
there's
some,
definitely some things. I'm sure there'll be some more setups later on in the week. I mean, between if you look at the S&P and you look at what it did over the last 3 trading days, last Wednesday you had an indecisive doji. Then Thursday you had a bearish engulfing where it broke above the doji's high and then closed below the lows. And then the next day it opened below that and then had a bullish engulfing to the upside. So there's just from those last 3 days, there's a lot of confusion in the market, I think. And it could really go either way from here. I mean, do we break that 380 and have some sort of relief rally? Do we reject right at 380 and it's just another trap and we head back lower? So that's mostly what I'm keeping an eye on this week, and like what I have in the back of my mind is what I'm asking myself.
Yeah, man. I think the big thing here is like this low here again. Even if like me and Chico were both talking, like we were expecting a stronger bounce from this like kind of follow through day, which we did not get.
Yeah,
but we're starting to see now. I don't want to say like inverse head shoulders, but we have this pivot low. For now, this is a tinier pivot high, a very kind of clear line of resistance. I still think in the short term, the next week, I think we kind of push through this 380 in time. But again, we know with these levels, especially with major markets and sectors, it's not like a stock where it has a retest and then third times through it breaks and it's clear as day and it goes forever. Individual stocks, sure, that happens all the time. With the major markets, this could happen 5, 6, 7, 8, a dozen times. It could annoy the crap out of us for a year before it really goes, or 6 months or 3 months. So we have to be aware that with these bigger markets and bigger sectors, you're moving you're moving hundreds of stocks, you're not moving just one. So these patterns can take more time to develop and can test these areas much more than we like them to. So that's just really keep in the back of our mind. But in the short term, again, it's either we're up through this 380 this week, or we push down to 360 and then shake out these lows. And that's kind of like the coin flip of what we do this week. But given how kind of everything closed Friday and the fact that a lot of these individual names do look kind of strong, it kind of leans me towards the way that maybe we do push higher, since a lot of these sectors, we go over, they all look very strong.
Yeah. It's funny. I was actually looking at some of the names that I had mentioned for last chart talk and just sort of looking at the charts. So like the first one was AMN. If you pull up AMN, Monday of last week, it looked amazing, ready for a breakout. It absolutely dumped on Wednesday, Thursday, and then had a huge recovery on Friday. So that just kind of reminded me, like, even when these setups fail, keep a close eye on them, because sometimes they fail, they make it look like they completely failed, and then they end up just erasing that sell-off in a day. So there's some opportunity there. So just even that one. What was another one that did that? AMR, which did a similar move. 3 days down, and then on Friday just recovered all that. Crocs, same thing, sold off. I thought it was going to head back down to support. I found some support at the 50 MA and had a nice recovery. So those sell-offs, they kind of give you an opportunity to be in these positions at a really, really low risk versus, trying to buy through resistance. If you were buying on that Friday in the morning, you had a much better risk reward. LLY, same thing, sold off Wednesday, Thursday, bounced off the 21-day moving average and then absolutely ripped, leaving people in the dust. That one looks like it's gapping up, breaking all-time highs and going on to new highs today.
All right, guys, we got a few minutes to the open. Again, thank
Oh.
you. Yep.
Want
Anything
to check
else?
one more chart? Alex is looking at RS 188.
RS. What price? 188?
188, yeah.
I would probably wait. This is 190.
I would probably wait for 200. Seems like you're just in the middle of this range between 170 and 200.
Yeah, I think this one is just, I think it just needs some time.
Mm-hmm. Needs to
Jeez.
fill out that wedge.
Yeah, 190, 200. I think, yeah, I think just definitely needs, chart wise, I mean, definitely is looking strong,
Mhm.
but you can just kind of draw like a little wedge in this, but
Yeah,
just
exactly.
need
Yeah.
to let this pattern develop more and not try to rush it. Just give it the time to set up here. And that. All right, guys. Good
Perfect.
luck this week. Post your top ideas in the chat. Again, thank you for everyone that ordered these watches. We have 30-ish of them left. So if anyone wants them, let myself know. Once they're gone, we're not making them again.
Yep.
All right.
Later, guys.
Talk to you guys later.